What's up, fam? It's your girl Alexandria B, and y'all already know why I'm here. So let's go ahead and hop into our Sunday swing trade watch list of the week. Now, if you watched last week's video, if you didn't, stop right now, go back and watch it. You know I told you all that I'm going to start our weekly watch list videos off a little bit different because I really want you all to learn how to become fishermen. So I want to show you all the things that I see as I'm going through my watch list that really let me know where I'm going to put my money at this week. So this week when I went through my watch list, I noticed that MACD and RSI, which are two different indicators, showed me what I needed to know, baby. So let's go ahead and get right into it. Now, when we're looking at MACD, which stands for moving average, convergence, and divergence, this is a trend following indicator, okay? And how this indicator works is it's going to look at the relationship between two different moving averages. Now, MACD is actually the relationship between two EMAs, which is the exponential moving average. You don't really need to know this, but just for a fun fact to kind of squirrel away, it's going to take your 26-day moving average and subtract it from the 12-day moving average. And then that's the numbers we get, all type of calculations, all right? But what it is doing is it's showing us the momentum behind price movement, all right? So think about when we're in a car. How does the car get speed? By us pressing on the gas pedal. That's the momentum. Our foot is what's giving the car the momentum to then speed up. Remember that, my babies. Remember that, all right? Now, RSI, which stands for the Relative Strength Index, this indicator here showing us the speed and the change behind price movement. So with us understanding that, what do you think is going to give you a signal first? The momentum indicator or the speed indicator? Let me know in the comments down below. Now, MACD and RSI will do this little thing called divergence. The word diverge just means when two things move apart. So when we're looking at MACD or RSI divergence, it's telling us that the price and the indicator are doing two different things. And we like for everything to be as one and one accord when we're getting ready to trade. If you here, there, and everywhere, baby, stay up out that trade. Stay up out that trade. Okay? But y'all can see the definition here. All right. I'm going to tell you in my terms, in my words. When we see MACD divergence, if it is bearish, MACD divergence, the price is going to be making higher highs, but MACD will be making lower highs. Let's hop on in here and let's pull up the chart now as we look at SPY and QQQ, and then we're going to go from there because I see what I see. I see what I see, y'all. We're going to kick it right off by looking at QQQ. My eyes will absolutely be on QQQ and SPY. Why? Because I already entered into leaps. I entered into some leaps to the upside because where is SPY going to go in the next year? But up. Where is QQQ going to go in the next year? But up. Y'all better get y'all in them leaps, okay? So anytime that I see price pull back, I'm looking to day trade puts to recoup the money that I've lost over there, or possibly even swing trade it if that's the signal that it's giving me. Okay? Now, the range and the change. Y'all look at, first off, just look at this, okay? We've made the same highs and pretty much the same lows the last 3 weeks. We come on back down here to the daily. Absolutely beautiful trend line. We did end up having a trend line break on Wednesday. I hope y'all caught that. If you in the family reunion Discord, link in the description down below, I know you caught that. Now, what happened Wednesday night after hours? NVIDIA reported earnings and boosted this market right on back up, which created this gap that we see here from 425 to about 433.50 importante. All right. And then on Friday, it did break and give us a new high, but then it closed lower. All right. It closed right on back up in there. And again, on Wednesday or on the weekly, we see we just really didn't do too much. All right. Now, one thing that I also want to note while we're here on this screen is that this is a double top that you're seeing here on the daily. We got one top. Sky, what are you doing? Two tops. Now, that might not be that clear to you if you are newer to the market, or maybe chart patterns is a little bit harder for you to see. So come on, mosey your booty on down here to a lower time frame. Y'all see that now? It's a double top. Babies, we got us a double top. All right, so I'm not interested in playing QQQ from this 436 to this 433.50. It's not even worth it. It's not even worth it to me. That could possibly be a nice little low day trade in there. I'm gonna extend this out just so y'all can look at that, y'all. But if QQQ does indeed lose 433, I will absolutely look to make sure that it breaks the trend line as well, and I will be looking to trade it down to 425. By the grace of Jesus, it will hold there. Okay? Why do I think that? Because when I turn my moving averages on, this red moving average that you see right here is my 200 moving average, baby. Come on down here to the bottom of the gap, touch the hourly 200 MA and bounce your booty back on up. Now, when this happens, when this move happens right here, if you have already not entered into a leap that expires in the year 2025, do that right here. Do that right here. Okay? Comment in the video below if you would like me to put up another video on how you can go hunting for the best leap contracts and strike prices to get. Y'all let me know. So absolutely want this move on QQQ. If we mosey our booties on over here to SPY, baby, it's the same dang setup. We got us the same old setup. Let me go ahead and turn off my moving averages. We don't really need to see that. And what we're gonna do is we're gonna mark off the gap that was made. Now, SPY did close higher on Friday than it did on Thursday. I still don't want to play it to the upside. I still don't, baby. Give me this pullback. I don't want it to the upside. I still don't. All right. So we do have this gap here from 497 falling window. So from the close of one candle to the first wick of the next candle. Right, so we had this candle close at 497.20. We'll just say 497.2. And our low, this lower wick here is 503.2. This is our gap that we have in here. All right, y'all. If we see SPY, same setup as QQQ. If SPY loses the 497.20, I will look to play it down to the 503.20. Is that the low? 503.02. Look, in real time, and I'm not editing none of this. We're just gonna say 503. 503, and this goes up. Okay, if SPY loses 503, I will look to play it to the trend line, which is going to be at about 500. And if it loses the trend line, my next target will be the 497. All right. If I come down here to my hourly, what do y'all think is going to be down here? Well, right in line with the moving average, right, or with my trend line right there, the purple is actually my 100 moving average. Maybe it'll hold the trend line. But if it does not, again, I will look for at this low here. So about 494. And baby, if it just continues to lose 494, then I'm targeting the hourly 100 MA at 491. Again, if you are already not in a lead for the year 2025 and 2026, when SPY holds, here is when you get your butt in. And if you're already in, if you feel like averaging down while you're still around in the same place that you entered, feel free. Feel absolutely free. Now, I know y'all didn't think that I forgot to show you the MACD divergence when we look at this chart. I just want to show y'all what I saw first, right? Because our brains will see it before the indicator does. All right, amen. Now, remember we talked about divergence. So I want to show you something right here. Now, y'all follow this cursor. When we're looking at MACD right here, and you can honestly really see the double top right here, second top right there, right? Now, follow this cursor up here. Where this first topped out right here, that was this candle. All right? Y'all see it up there at the top. When the second, when it topped out again right here, look at the price. It was higher. But MACD made a lower high. But the price made a higher high. Woo, come on, y'all. If that ain't divergence right up there in your face, we just gonna use the ray. Okay? We got us deep lower highs right here while the price went higher. This is bearish divergence. When we see divergence on our charts, like when we see the divergence on MACD and on RSI, all right, remember that this is the momentum and RSI is the speed behind the price moving. I'm going to pay attention to what MACD is telling me what the momentum is telling me a little bit more. You making lower highs, but the price is making higher highs? Nah, baby, that's bearish divergence. We need to be looking for a signal telling us that price is coming on down. Now, if I see bearish divergence with QQQ, which is the ETF for the NASDAQ 100, which we know that index is heavily tech weighted, what y'all think the rest of these tech stocks gonna have? Bearish divergence. Amen, amen, amen. Swing on theme. So let's go through it and see what we see, y'all. Ooh, I forgot I wanted to show you this. Before we get there, this is QQQ. I have it on different layouts. So we already know what we saw in QQQ. We already know we seeing this bearish divergence. We got our setup. Boom, 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 boom. When I look at the Qs on the lower time frame, on the 15-minute and the 5-minute, we have equal lows with 3 consecutive lower highs. What chart pattern is that? Let me know in the comments down below. What's the name of this chart pattern? Go get your money. Go get your money on the Qs this week, my babies. So I had it right on over here to AMD because, of course, we're going to follow it through from our entry last week, which we killed it, y'all. We absolutely killed AMD last week. It did create this gap up. Obviously, Wednesday night with NVIDIA, AMD was going to follow it. Amazing sympathy play. Y'all killed it. Congratulations to those who stayed out of NVIDIA the week that they were going to report earnings. Amen. All right. Now, this one is pretty simple. You could actually catch a beautiful day trade off of this. And I am looking to possibly play this at open on Monday, tomorrow, possibly. We see the support right here at 174.60. If AMD does move below 174.60, that's almost, I can't do math in my head, $2 move down to 171 or 172. So just make it a whole number right there. That would be a great day trade. Now, if it continues to lose 172 and you get an hourly close below this 172, I would look to go ahead and swing that. And we're going to go on and short to fill this gap. All right. Now we have some very obvious stopping places inside of this gap. So I want to show you a couple of methods that you can use to do it. One, you can take the gap and then measure the fib levels in between it, right? So since this was a gap up, we would want to use the fib extension. And we start at the bottom. You just raise it, you click it to the close of this gap, and then you drag it back on down to the bottom. Now, what we want to look for, there's 3 levels that are just like we love as traders when it comes to the fib levels. And that is the 0.382, the 0.5, and then the 618, which is the golden ratio. Y'all should definitely look up Fibonacci retracement levels or Fibonacci sequence. And I feel like it'll help you understand how the Fibonacci levels really work. So I'm going to go ahead and put levels at all of those. We'll delete the fib, and then let's look at how price reacts at those 3 levels. And we'll come down like on the 5-minute time frame. Let's go back to a point in time where price was actually in these levels in here. We can come right here. It's a little bit of a chop fest, but I mean, just look at it. Resisting it here. Held it as support there, and you get this move back up, right? once again right here is this was resistance until it came down, came on back up, resistance, support. We like this. It's a little janky, right? Price wasn't just perfectly moving in between there, but I love technicals. If it made sense in June, it's gonna make sense way back there in October the year before. So I love technical analysis. Just love it. It is what it is. So we see those levels. We see how price has moved beautifully in between those. Look at this, how it held it there. And we came on back some days. We are all the way back looking at February 8th, the beginning of the month. And we see that price reacts with these three levels in here. So guess what we're going to do? Guess what we'll do? If we see that price falls inside of this gap, we get an hourly close into there, we will be looking to scale at the 169, 168, I'm rounding up, 167, all right? Those are the levels that we will be watching inside of this gap. I absolutely, because since I know that this was a gap up in price, right? Baby, I'm real cautious about shorting the market, selling down on the market, getting puts when we're inside of a demand zone. I need to have me some levels to scale up out of here on, okay? I need to have me some levels. So that is one way that you can do that there. And we mark those on the hourly. So let's see what happens if we were to mark this on the daily using the same method. Bring it on up to where it stopped. You drag it back down to the bottom. Zoom, zoom, zoom. We're going to look at those same levels. And you honestly really could mark off all of these levels. Fibonacci levels are basically where price is most likely to pull back. But the 0.382, 0.5, and 0.618 is where it's really most likely to pull back. All right, so look, we got these same levels: 169.19, 168.27, 167.35. Come on, and we could might as well go on and put the 170 right there too. If we were to lose 172, I'm targeting 170.50, 169.19, 168.27, 167.35, down, 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 down until you bounce, possibly close the gap. Or maybe it'll hold one of the fib levels and bounce on back up. All right. Now, the same way that we sat here and when we were looking at the cues, we said, well, we see some bearish divergence there. Would we see that with AMD as well? Let's check it out. Let me get my arrow out. Is this the arrow? Child, I forget where that dang on arrow is every freaking time. So I'm just going to go ahead and draw it. Arrow. All right, so y'all notice right here when we got this bearish crossover, look at the correlating candle. We got a bearish crossover, and what was MACD doing? Continuing to go down, but what did price do? It went up. Bearish divergence. Bearish divergence. Now, I didn't point that out in last week's watch list because NVIDIA had earnings. NVIDIA had earnings, child. It was something that we just wanted to, it was something we wanted to sit there and watch. So I'm going to delete that for now. Now, something else that I do want to point out though here is this trend line. That same trend line that we was looking at in last week's video. We got that same old trend line here. Now, if y'all have a hard time drawing out trend lines, I want to show you what I think is the best indicator for you to use. All right, the trend line with breaks by Lux Algo. Use it, love it, do all them things, okay? Now, I know you sitting up here like, oh, Lord, look at all these trend lines. That's because trend lines is made and broken and remade and broken again all the time. The B is just telling you that it broke this resistance trend line, and look how price pulled back on Friday and came right on this trend line. So again, I'm only looking to short it if we come inside of that gap. That's the only time I'm trying to get puts. Would not be too surprised because the volume was lower on Friday. It did pull back to hold this trend line. Perhaps we'll get a bounce back up. But y'all, this is also a tweezer top candlestick pattern that we see here on the daily. I truly don't think so. Bearish divergence. Go with the chart, go with the chart, go with the chart. Amen? Now, I actually feel a little bit different about Amazon than anything else that we've looked at. What amazing news came out about Amazon last week? Let me know in the comments. I'm trying to catch Amazon to the upside, child. Now, let me show y'all why I marked this off. Y'all see all this resistance here. We had this rejection there, and then multiple rejections. 1, 2, 3, 4 rejections right here at the, we'll just round up to 178. Baby, I'm trying to catch this break in 178. Okay? That's what I want. Now, I like for price to pull back. I never want it to just open and then go. All right. Now, we do have these highs right in here at about 175 with this gap down below. I would like to see price kind of pull back down towards here, towards the 172, where we have this resistance and then previous resistance that turned into support. Let me mark it off for you. So around like this 172.15, wouldn't be mad at price pulling back towards here and then catching a bounce to go back up there. Now, if the market does have strength and it does come up here to this 178 and it does indeed break, guess what? Guess how patient Alexandria is going to be. Alexandria is going to be this patient. I'm going to sit here and watch it. And I'm going to sit here and wait on you to pull back. And as long as it has low volume as it's pulling back, I'm going to get ready to buy when you get back here. And then guess what I'm going to buy? This ain't a swing. This a leap, baby. This ain't a swing. It's a leap, baby. And I got one more that I want to show you guys. And then we'll be done with our weekly watch list for the week. Apple is really an either or setup for myself. All right. If Apple does lose the support levels that it has kept here at the 180.17, I'm absolutely looking to trade it down to the 176. However, if Apple does indeed break above this 187, although on the daily, y'all, that's a bearish engulfing. Now, if it does indeed just have strength and it breaks up here, I'm going to let y'all know what I'm looking at. I'm not looking for it to break this resistance trend line. I'm looking at one high, second high was lower. I'm going to wonder if this third high is going to be lower. Why? That's really what I'm looking at, because if so, I know y'all see that chart pattern. I know y'all see that potential chart pattern. If it come up here and then reject this, what is it? Let me know in the comments. If it gets here and then rejects, baby, we puts right on back down here towards the 180. Amen? And that's what I have for y'all. That is the main 4 tickers that I'm looking at this week for swing trades, particularly QQQ and SPY, because I really like to do short swing trades when I'm sitting in a leap to the upside. I like to do a short put swing trade to recoup my shmoneys. All right? I know y'all can do this. Hit sure your piece of stuff and Wall Street been black. I'm going to see you at the top. Bye.